The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing today? So Thursday over hump day yesterday, and closing into the week here, looks like we're moving up in the market, looking at touching on those highs. So just a little bit a ways away. And if you have any questions about futures, forex, options, stock, Nadex, etc., feel free to give me a call. You can reach us at 877-927-6648. Again, that's 877-927-6648. If you're outside the U.S., give us a call at 727-445-1044. And do a quick market wrap for you right now. We got the S&P up 8.25 points. We got the Russell up 5.9. We got, let's say, the NASDAQ is up 25.75, and we got the Dow up 80. Oil's up 77 cents on the day, and gold's flying up $10.40 on the day. We got corn up 350, and we got soybeans down 875. And then if we look over at the currencies, we got the euro dollar up 70 pips so far on the day, and pound dollar up 56 pips, Aussie dollar pretty flat. And let's see here, we got a euro yen up 89, pound yen up $1.06. And so let's go ahead and look at the markets and see what we're looking at here. I'm looking at ES intraday, and it's, like I said, it's just been flying up on the day right there. And Russell started a little bit of head fake in the morning and then turned around and just shot up. So after a little bit of a drop first thing there right out of the gate. In addition, so we've got those two, got the major two big indices also pull up, obviously. You can never forget to have the Dow, so checking that out, and it's been up pretty solid ever since about 11 o'clock there. It started moving up around 8:30, but really started moving its move, right here around 9 o'clock. We got a nice solid move, just solid up on the Dow. And if we go over, we can look at gold, check out that market, see how that one's playing out for us. And gold, like I said, is up on the day, but it did pull back down and do a bit of a retracement from where it was at before. So just, checking everything out, making sure we're looking at all the right things. And going over, and we zone in on natural gas. Natural gas was just heading down solid. And then it changed things around a little bit. So we got a little bit of a move up. Of course, that was the impact of the natural gas report. So as soon as that came out saying the inventories were lower than expected, then, of course, that drove natural gas up, much like the oil inventory report did yesterday on oil. Oil, along with natural gas, moving up, but it's been moving up pretty much all day, and started that move up yesterday, right after the oil inventory report, and just kept moving up ever since. And we go over and zone in on a couple of the currencies, and we can see right here we got the pound dollar, and it's been very solid all day long. So we started off really early this morning, about 1:30, and then just kept going. And got multiple entry signals there on the pound dollar. And looking over at the euro dollar, after having a bit of a down stint there yesterday, it decided to take all that back and is shooting back up on the day. Dollar getting weaker, of course, making the market get stronger. And then if we go down and look at the soybeans, they've been on a definite wild ride today. And let me see here. Pull this up. I'll just pull it in here on soybeans and zoom in for you. And we started off early this morning, and they just dropped. So literally, we saw a 20-point drop, ran right back up, came right back down. So soybeans just going a little bit crazy today. And then we got our corn has been moving up steady, just trickling up a little bit over and over, but, moved up on the day yesterday, and it's been moving up today as well. So that's sort of the market wrap, looking at all the markets. And, we always want to look and see if we have any kind of trade set up. So if any come up, we'll be bringing them up as we're going through things. And one of the things I just want to remind you of is as things are going along and things are moving around, that we want to be able to check out and see what's going on. And so one of the things we want to check out is we want to look at ways to minimize our risk and maximize our reward. And why is that important? Well, what you want to look at is two different things: probability, profitability, planability. You want to put all those things together. So planability is the ability to actually do a trade. So whenever you're picking a trading style, let's say you want to be a day trader, and let's say you only have $10,000 in your account. Well, it's going to be hard for you to do stock because you need to have at least $25,000 minimum daily balance in your account to do stock on a day trade basis, which means you're opening and closing more than 3 days in a 5-day period on the same day. So if you open and close on the same day, do more than 3, they're going to flag you as a day trader and require you to have 25 grand in your account if you want to continue to day trade. So then you might go over and you might look at forex, or you might look at futures. When you look at those, you might get a little nervous. Why would you get nervous looking at those markets? I love trading them. I know a lot of y'all love trading them. But the one thing that makes people nervous is you have insanely massive leverage. And leverage has sort of a name of being good and bad, right? It's good when it goes for you, and it's bad when it goes against you. And so if you're wanting to get into the futures market, and you're wanting to take it, or even the forex market, and you're wanting to take advantage of that massive leverage, then a way that you can do that, where the leverage is working in your favor, but not against you, okay? Meaning, having 200 to 1 buying power. So like $1 is like the equivalent of a $200 buying power, but having that go for you, but not against you, then you can do what's called box spreads. And you can trade these spreads over on Nadex. And if you haven't opened a Nadex account, go to tfnn.com. Right in the top right corner, click on the Nadex banner. When you click on that banner, then what's going to happen is it's going to take you right to Nadex's website, and you can click on Create an Account. You can open a live account. It's only $100 to fund a live account and you can start trading, or you can open a test drive account. $100, that's enough to get it. You probably want to put more than that in, but that is enough to actually get going. But to keep going and to go through the entire process, I recommend people put $1,000, $2,000 in. But you can start with as little as $100, even $500. We'll get you going. Anyways, go in here, open a live account. Now, if you want to open a demo account, okay, it's free. It literally takes about 15 seconds. Click on Open a Demo Account. Then hop over here, enter your username that you want to use, first name, last name, phone, and email address. Hit Apply for Demo. As soon as you do that, they're going to send you an email address. All right, they're going to send to your email address a password. And in that password, by the way, just a tip for you, if it ever says O, it's a 0. It's not the letter O. And get that username you made, get that password, hop over here to log in. And once you log in right there, you'll be able to enter your username and your password on the demo or in a live username, password, hit log in, and you'll be logged into your account. Once you log in, this is how it's going to look, okay? And you'll be able to, play some trades and do, a variety of different things that you can look at. So, and some of the markets that you can trade, let's check them out. Well, you got bull spreads on the FTSE. You got them on the DAX, on Germany 30 here. You got the S&P 500. You got the Russell 2000. You got the NASDAQ and the Dow. If you go to Forex, you got Aussie dollar, Euro dollar, pound dollar, Euro yen, pound yen, US franc, US Canadian. So you got a whole variety of Forex pairs that you can trade. And on the commodity side, you got corn, crude oil, gold, natural gas, silver, and soybeans. So you really can start participating in these markets and have completely limited risk. And, when I say limited risk, it's not like limited risk like you put a stop loss in. The strategy itself, the spread itself, actually becomes a stop loss for you. And so you go in and let's say we were looking at the S&P this morning, okay? And, let's say right here had an entry signal about 921. And so what I'm going to do is I'm going to go here to US 500. Now we're just going to pick like the 8 to 415, all right? And what we're going to do is we're going to want a spread that's as close as possible to where the market is trading. So we got one here at 1405, so we'll check that one out. And I'm going to pull up the chart on that spread. This is just one example of many that we could pull up. And on that chart right there, what I'll be able to see is, let's see again, 921 would be 1021 on here. By the way, all the times on Nadex are going to be in Eastern time. And so we want to find the perfect time here. Let's see, the chart is not pulling back. That's been happening lately. And I'll write them about that, figure that out. But basically what would happen is you can get in, and let's say you could get filled at 14, let's see, it was at 1404, and let's say you could get in at 1406, all right? so some time value in there. Then if you got filled at 1406 on that trade, your risk would only be down to 1405. So let's say you actually bought this right here at 1405, or let's say 1406. And so that'd be a $10 risk. Let's say you bought it at 1407. That'd be a $20 risk, okay? With a $280 potential profit, all right? So if you bought that and you were in it right now, then what kind of profit would you be up at the moment, all right? Well, if we take the sell price of 1412.4 minus 1407, you'd be at 5.4 points, or $54 on a $20 risk. So that's more than a 200% return, almost basically a 250% return on your trade in one day. 250% return on investment right now, and that's if you closed at this moment. It could go higher, could come back down. As long as it expires above 1407, then you'll break even. Every tick above that, you'll make $1. But the big thing about this, okay, and let's look at this, 1405 to 1435. Here is the big key, all right? And if we go in and we're going to draw a box, you can usually draw like rectangles and things like that under your drawing tools on your charting platform. Anyway, so you go over here and we're going to draw this box. And this box, again, goes all the way up to 1405 is the floor. You can also see market floor, 1405, market ceiling, 1435. And so we're going to edit this box. And we're going to say, take us up to 1435. And let's expire out at 3, because I'm Central Time. Nadex is always lifting everything in Eastern Time. 3:15. All right? We're going to hit apply. We're going to hit OK. And now what's going to happen is this box will go all the way to 3:15, but I can make money all the way up to here. But let's say it would have went against me, then I'm not out of my trade. I can't lose more than $20. I'm down, but I'm not out. All right? Unlike a futures contract where you'd be out, you're down, but you're not out. And if it comes back up before expiration, then you actually could end up profiting on the trade. And let's say it doesn't come back up. Then you limited your risk on the trade. And, I did trade, several trades today. One of the trades I did was on the Russell, and I got in right when it started to go down, but I had a hedge on. That hedge reduced my risk. It went, like 5-6 points against me, and I literally only lost, $1 on the hedge. And, I placed another trade on that put a little different risk on there, but the initial hedge trade only had $100 risk on the trade. So, very cool way to trade. Gives you all the way to 415 to be right, opening that up in the morning. And again, it can go against you, but if it does, you're not out. You don't get stopped out of the trade. So if you're annoyed of getting stopped out of trades, you don't want to get stopped out of trades anymore. You like to trade Forex or even ETFs, like major ETFs like the Spiders or IWM, this is a way to do it. So we'll talk more about that when we come back. Feel free to give us a call, and stay right there. We'll be right back after the commercial break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome back to the Diagnostic Trading Hour. And I want to go ahead and go over a few things with you. One of the things I want to look at is the S&P has just been running up like crazy. And one of the things you always want to go, let's just say you caught this trade, let's say you're long right now, and you're trying to figure out, where to tighten your stop, where to take your profit. What is your profit goal? Well, there's a lot of ways to do that. One of those is technical analysis. I love technical analysis. I like to use it. As you can see, I got some basic stuff here on my chart. At the same time, I'm really always looking for, a way that I can, have an objective way on an area where I may want to take profit. But one of those ways that I use, this is called statistics. And but without getting overly complicated, let's call it a standard deviation. And one standard deviation encompasses 68% of the total movement, either up or down, that is expected in a market. And that's really what your goal should be on a daily basis, is to try to capture one standard deviation. Okay? And we are going to be making a tool that we're going to be bringing to you very soon here on TFNN that'll help you out with this. But right now, based on all the calculations, all the math, let me pull it up and I'll tell you what a standard deviation is on the day, okay? So on the S&P 500, we got a standard deviation of about 10.75 on upside or 10.75 down on the downside. And so what we're going to do is we're going to take that number and then we're going to look at yesterday's close and go, well, what was yesterday's close? Yesterday's close was 1403.25. So we go here. And then what we're going to do is now we're going to add it to that since we're moving up. How far up should we expect the market to go? 3.25 plus 10.75. So really we're looking at a high expectation of really 14.14. And so far we're sitting pretty close. We're up there to high of 14.12.75. So literally just a point away. And I mean, it's, it's not necessarily going to be to the penny. Every once in a while we get like literally right to the cent. But, pretty close to that level. And so these are areas where not necessarily, I mean, you could trade a reversal. If you're going to do a reversal, you want to have a very low risk reversal. So Nadex is a great way to do that. So, because sometimes you put the trade on and then it comes back down in your favor after it spikes up a little bit. So maybe it goes to 14.14 or 14.15. But, the other way is to go in and, this might be where you would tighten your stops and start trailing up your stops. You can use an ATR. There's a lot of different ways that you can trail your stops, but definitely this would be the point to either take profit, take partial profit, or at least take partial profit and trail your stops, or trail your stop on your entire position at this level right here. So, you may want to put it like down here, like I say, 14.10, and depending on what kind of bar types you're using, what kind of bar, time frame you're using, but definitely be checking that out and, tightening your stops at this level. Because once it exhausts that standard deviation, I mean, you can have days where it goes a second and a third deviation. Usually when that happens, though, there is some additional news that drives it. Okay, something that's really pushing it that additional deviation level. So unless you see some big news coming out, you definitely want to be checking that. And anyway, so that's ES, and we can look at some other markets that have been moving quite a bit over here, and one of those, let's see here, we got the S&P, we got the Russell, we got the NASDAQ. Let's check out, let's see, corn and soybeans both had, like I said, the big runs, a big run. And we'll go here and check out corn. It hasn't really done a whole lot. And we can look at what were its standard deviation levels and how did it, cooperate in that with those deviation levels. So, and on that right there, we got a standard deviation of plus or minus 1 there. And we're going to go in and figure out the numbers here. So on the numbers, 1 standard deviation move. It's pretty simple, 820 minus 808. So we're at 12 points on the standard deviation move. And we got to look at what was the close of yesterday. So yesterday's close was right at 1403.25. Oh, hold on. No. Yes, there. And ZC. And I'm going to pull that in. And so I go to the close. Yesterday was 803.5. And I'm like, that's a really high number. It's like corn really has flown up. And so we go in and put in 803.5. Now we have our close. And then we go, at most, what should we expect corn to do today? So it may do more, but this is really the expectation, okay, the consistency. And if it consists of 68% of the move, that means the remaining balance is only 32% of the expectation. So that's why we like to work on 1 standard deviation moves. So really the highest move that we're expecting today on corn is going to be sitting up at 815.50. So hold on right there, folks. We'll come back. We'll look at a few more markets for you. And be right back after the commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And right here, we got a move on corn, run up on the day so far. And again, if you got any questions, give us a call, 877-927-6648 or 727-445-1044. And corn right here, we're looking at from the last commercial break, had a run up of about 12 points, and or a standard deviation move of about 12 points, which would put us up at about 815.50 on the December contract. So we're sitting at 810 right now. Pretty good chart. I may be want to tighten my stop here, but still got a few more possible points of movement left on the standard deviation. So corn's just been, it's been moving solid all morning long. So you can definitely take advantage of that. Now, if you went over and you were trading on Nadex, then you want to make sure you have the right contract. So this is a simple mistake a lot of people do make. And so you want to make sure that, like I said, if you're in Nadex, what you want to do is, let's say we're looking at corn. We go over here, click on corn right there, click on this, and look at the contract it's following. So it's following the September contract. So on that, if you want to trade corn on Nadex, hop over and just make sure you pull up your September futures contract. And that way you're looking at the right contract, the right month. And, it's going to look pretty similar, but it's going to obviously be different prices. It'll throw you off a little bit. So it could throw you off a lot. But just depending upon how the futures markets are trading. But right here, and obviously you can also see that, back months are trading at more. That's normal because you have what's, the storage cost and everything built in. But they are trading quite a bit high. And corn's just been, moving higher and higher and higher. We'll see if it goes back up and breaks those highs. And we've been getting some rain here in Texas, and I know talked to some friends out in New Mexico. They're getting some rain, but we'll see if they get enough up north to have any kind of impact. But it's really coming on the end of the ability to have any salvage of the corn crop. So we should expect higher prices, pretty much going forward here. But looking at this right now, had some good solid up moves, have a very potential additional entry coming up. So corn, solid market to trade, good market. And but what I will warn you about, if you're trading corn futures, that thing can move, okay? I mean, it can literally move like 4 or 5 points in a matter of a split second. And that's one of the reasons I really like to trade on Nadex, is I don't have to worry about those big, fast markets, gaps, anything like that. Stop running where it just flies through your order. I go in there, I put my trade on, and my risk is limited. And so I don't have to worry about, like, what if that thing just starts falling down on me like crazy. I don't have to worry about that. If you're trading soybeans this morning, I mean, you could have had, a little bit of a hard time depending upon, how you're trading it. But, I mean, right here, you look at this market right here, and, this flew down. And that's just a matter of, a very short period of time right there. From here to here, matter of a couple minutes. And soybeans just flying down. So it's been some crazy stuff going on. And anytime you're trading these markets, the futures markets, be careful. Make sure you know what you're doing. And if you're new to them, definitely trade in a very defined, limited risk way. And that's, like I said, that's why I love Nadex. If we go over here, and we can also check out the binaries. I know a lot of people are very interested in binaries. I will say binaries are easier to understand than spreads, but they are a little harder to trade profitably. So just keep that in mind. So they're very, very attractive. They're new to the U.S. They're not new internationally. So outside the U.S., they've had binaries for a long time. Not a new product at all. One of the cool things, though, is that you can trade binaries on the Nadex exchange. It's actually the only exchange in the world where you can trade binary options. Everywhere else you trade them, you're trading against another, basically you're trading over the counter. And they're trading against you. They can, do whatever they want. I want to say it's like 25 grand, and you can open a binary options over the counter website, basically. So you don't even have to put that much money up. And I've read multiple stories of people like them changing the prices to get winners versus lose, knock somebody out of a trade. And that's what I love about exchanges. Exchanges, you're anonymous. They have no interest in you winning or losing. Okay? They are there to help you get your orders filled. All right? That's the whole point of an exchange, for you to place orders, not for them to profit on the direction of your orders. Whereas an over-the-counter market, whenever the counterparty is the person that has your account, then when a lot of times they're making the market, okay? Which means when you're buying, they're selling to you. And so they lose when you win. And so you definitely want to trade on an exchange whenever possible, which pretty much should always be possible for you in some way, shape, or form. And if there's not an exchange, you need to be very, very leery and very, very careful. And if it's not in the U.S., then you got to deal with how you're going to get your money back and what are you going to do if something goes wrong. So I love having, like an exchange here now where we as U.S. citizens, U.S. residents can trade binary options, and we can trade them, not only trade them, but trade them on an exchange in a regulated environment. But you can go in and you can trade the binaries. Like I said, they're very simple to understand. Okay? So basically every binary is worth $100, period. All right? It's a $100 value. And whatever your risk is, your reward is the difference between that and $100. So if your risk is $20, you can make 80. If your risk is 50, you can make 50. If your risk is 80, you can make 20. All right? That's a binary option. That's the profit and loss. It's always $100, and the risk and reward will be always add up to $100. So I can pull up any binary on any market. Doesn't matter whether it's the US 500 or the Nikkei 225 or whatever. And if I click on the, let's see here. Let's go into the binary there, and I click on it. Doesn't matter when it expires or anything else. Risk, $83. Reward, $16.50. All right? So we go over here. Risk, $2. Reward, $98. So no matter what, it's going to add up to $100. That's it. And it's a true-false statement. If you buy it, you're saying that this statement is true. That the S&P 500 September futures contract will be above 1405.9 at 2 o'clock Eastern. If you sell it, you're saying the statement is false. So you're saying that it will not be above, basically the S&P 500 will not be above 1405.9. All right? And by doing that, then you make money. So true or false statement. If you're right, you make money. If you're wrong, of course, you lose money. And you can get in and out anytime before the expiration. So selling means that you're saying the S&P 500 will be less than or equal to 1405.9 at 2 o'clock. Buying means the S&P 500 September contract will be greater than 1405.9 at 2 o'clock. And that's it. True, false statement, yes, no, $100 value. That's simple. Like I said, really simple to understand, a little more complicated to trade. So you do want to make sure that you do understand how they work and also understand, the good and the bad, so that way that you're effectively trading them and not just throwing your money in the wind. There's a lot of people come in here and they're like, oh, wow, I can make $2. I can make $98 on a $2 risk. Well, I could do like 100 of those. And if I make that money, that's a $10,000 profit in my account. So, you definitely want to know what you're doing when you're doing that, because what you're saying here is in the next 18 minutes that the S&P 500 futures contract, the September contract, is going to be less than 1405.29. And that could be true, but that's also going to be a pretty big drop, okay? I mean, you're talking about a 6.1, so basically 6 points and a tick drop here in the next 18 minutes. And, not a big deal, $2. I mean, if you're only doing one, but those $2 add up, especially if you're doing 10 or 20. If you do one, you're going to want to do 10. If you do 10, you're going to want to do, 100. So, and 100 of those $200 at a time can definitely add up. Now, you get one or two of those trades right, whew, it pays off. But that's really that's a bet, okay? I mean, you're talking about just a massive move in a very short period of time. So that really, in my opinion, not the way to trade them, all right? I'd be more inclined to say the S&P is going to stay below 1413.9, and this is sort of funny, but it's a reverse, is I'd actually be risking 91 to make 9. But as long as the S&P stays flat, goes down, or doesn't go above 1413.9, actually it doesn't go to 1414 or higher, I'll make my $9. And you can just collect that premium like every hour, okay? And put those trades in. So that's one way to trade them. Another way to trade them is just, sort of the 50-50 trade, okay? And that's where you're going in, and the market's like right where it's at, like 1410 right here. And, like you're risking, basically you're saying, will the S&P above or below 1410.9 here at 3 o'clock Eastern time? And so by doing that trade, you're risking 57 to make 42. Or if you want to flip the trade around, then you'd be risking 45 to make 55. So you have sort of, closer to a 1-to-1 risk-reward ratio. So that's one way to trade them, all right? Another way is to go over to the daily contracts. And this is probably the easiest, I think the best way to trade them, is you go in and you find a contract and you can sort of use this price ladder right here, sort of like an option chain, to see what the price, absent of time, okay, just what would the price be if it were to move. So if the S&P were to move 3 points, how would the price change? So let's say you think the S&P is up at its maximum standard deviation level. It's only a couple points away from that. So let's say it were to drop a few points by the end of the day, all right? Then, what could you expect in that price move right now if it were just to drop right now? What would you expect? So if I went in and I sold this at, let's see here, we'll go down a little bit lower. We'll get below the market and we'll get a low risk trade. So get a really low risk trade set up here. And if I do this trade right here, I could go in, I could risk $7.50, saying that it's going to be below 1404 by the end of the day. Do I think it's going to be below 1404? Probably not. So, but why would I do that trade? Well, let's just say it drops 3 points. How would the value change? Okay? So this is 1404 right here. And, well, it would change from being worth 93 to being worth 84.50. So I could basically make, $8 or $9 on that $7 risk if it just moves down 3 points, which means I'm making 100% return on my investment. Okay? So I don't have to go for the big $92 win because that's a very elusive win. All right? A lot of times that's becoming a lottery ticket. But I can go in there for like a double my money trade. And that's a great way to trade. Double your money over and over and over again. Put up $70 risk, make $70 profit. All right? So I'd go in and try to buy it back, say at 85. And if I can buy it back at 85, I've doubled my money, right? Because I put $750 in, and now I got $750 out plus a $750 profit because I bought it back at 15. So anyway, so I sell it at 92, and then once I get the order filled, then I buy it back at, like I said, 85 or whatever. But just go in and really think about going for like a 1 strike or a 2 strike move. Don't be trying to go for the entire thing. That's where you're going to get hurt. Other things you can do is you can use the whole standard deviation levels at the beginning of the day. So you can go in and you can look at the up and down standard deviation moves and go, okay, what's the expected standard deviation? Maybe just go for half of that on the upside and the downside. So, if we were looking at a, 12 or, say 14 points, a 12-point standard deviation level, and at the beginning of the day, let's just say right around, the market here was at 14.05. So we could be looking at, say, 14.11, 14.10, something like that. So you could be looking at a couple of these trades. Well, how far out would those be? 6 points up and 6 points down. Go 2 strikes up, go 2 strikes down, put those trades on. When either one of them gets up or down, then you can close out, as long as it's at least double, close it out, and now the other trade becomes, in a sense, a free trade because you've made the money the profit to cover the risk on that other side of the trade. So that'd be a way to straddle the market. So like right now, if I wanted to straddle the market, and the market's sitting right here, then I could go in and I could buy this one. Okay? So I could buy the 14.16, and then I could go down and I could, say, sell the 14.04. All right? And now I just want to make sure that if I do that, we're a little bit higher, so I may even wait till it gets a little lower. But before I do that, now, my total risk on this straddle trade is pretty low. It's only $26. Okay? So if I can sell either one of these for the difference in profit there, for the difference in risk, so then it becomes a free trade on the other side. And it's basically, to me, just like I said, the ideal way to trade these. And so that one's already, going up in value a little bit, but you can place that trade right there. So we'll go ahead and place this the sell side trade, and we're going to put that on at 92.50 at 750 risk. We place that trade, orders in, and then we'll pull up that trade, and we're going to flip it around, and we're going to go in here, and we're going to place a buyback on the trade. Okay, now if we risk 750, then if we doubled our money, okay, go into $85. All right, so $85 would give us basically a 750 profit. Put a place order. Now that order's going to be working for us. If that trade closes out, we doubled our money. We put 750 in, we made 750. So just some thoughts, some ways. I just want to get you thinking about different ways to trade binaries. You can also use them as hedges. I use them as hedges sometimes on my spread trades, and that's a really good way to trade with them as well. So that way, if you put in your spread trade and the trade goes way against you, you have the binary hedge on, and that's probably one of my favorite ways to trade. And I probably should have thrown that onto my Russell trade this morning. That would have worked out really well. And it covers all your risk, if you do it right. So you can go in there and, like I said, you place a spread trade and you just make sure the binary trade would cover you if it went all the way against you. Some other things to look at. Let's go ahead and do a market wrap here before we go to commercial break. And what we got on the market right now is we got the S&P up 8.25 points. We got the Russell up 5.6. They're sort of all pulling back from their highs there. We got the NASDAQ up 24, and we got the Dow up 75. We got oil still up $1.17, and we got gold up 12 points on the day. So hold on right there, folks. We'll be right back from the commercial break. Feel free to give us a call if you have any questions.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, folks, welcome back to the show here. Darrell Martin, TFNN, Diagnostic Trading Hour. And want to go ahead and let y'all know that we got several things going on here in the market. We got soybeans just continuing to push down. They're doing a little bit of a pullback, but definitely pushing down. Apple is definitely giving it up after a little bit of a move earlier this morning. And I think it's going to be heading down here. And basically I got the crossover here showing right at about 1220, 120, starting to push down on Apple. So right now, my opinion on Apple is that it's going to go down for the day, for the rest of the day. So I don't know how much more down. I'd have to go into a standard deviation level. I could do a check on that for you. And we'll see how much down we think Apple is going to drop. And so let me pull it up, and I will let you know what we got on a standard deviation move. We basically have about a $7 standard deviation move. And so if we pull that, $7, I mean, that'd be a big drop down. And I don't think we're going to pull a full 7. So if we go in and do the half to 350 off the high, that'd put us, let's see here, we got a high of 13 or 36.35, and basically just everything being so overbought right now. And we go in and we'll take, like I said, half of that off. That puts us down a little bit more, but really not that much. We got about another $1 or so drop. I would be waiting for a little bit further move down at the moment for another entry. And right now, it needs to basically like move back down just a little bit more before you take another short entry. So that's intraday. So on long term, be a totally different story. So we go over here, and so intraday, of course, I took it up in the morning, then we had it down there a little bit lower. And we got, we're still long. So yesterday, I think one of the callers, or somebody over the Tigers Den, was asking where was that on Apple, and I said, well, for longer term, I am bullish right now. For shorter term, for intraday, I was bearish. Again, yesterday at the last half of the day, bearish last half of this day. This sort of seems to be the pattern right now for Apple. But yeah, I definitely still have a bullish sentiment, even though we had a little bit of a down day yesterday on Apple right there. And we can go in and pull up just a normal looking chart here. This is sort of a different style of chart that I use, but we'll go in and we'll look that up. Zoom in over here. And you can basically see it's breaking yesterday's high there, so that would continue to give me that bullish sentiment that I started with over here. We broke the high back here on the 13th, and had that over here, again right here on the 10th, had it, and then, keeps going. So we'll see if that continues on for the pattern there, but right now I do have a long-term daily bullish sentiment, but I have just intraday, like I said, sitting a little bit bearish on it. And we'll go ahead and do a market wrap up, and let's see if we see anything else just standing out on the day. We got oil continuing to climb, and so it's just pushing for the day. And let's see here, we got natural gas. It's starting to give that little rocket fuel back up that it had there after the natural gas report. It's starting to give that back up. We got the Dow. It's starting to actually hesitate. And we got the Russell. So it is, let's see here. Let's update the current here. It's also hesitating up there at the high. So we're starting to see all of them hesitate. If we go over, we pull a look at the broad market index. It is actually finally starting to turn over. So we'll see if the broad market drops over here below about 1,060. If it does, then it's actually really starting to move back down, make a little bit of a trend down. But broad market's starting to give it up there. So we'll see if the stocks overall decide to go with it. And then let's see here. We look at gold, and despite its big run up, it's just sort of chilling out at the moment, so we don't got a whole lot more going on. But thanks for tuning in. Thanks for listening. We'll be back tomorrow. If you got any questions, give us a call, send me an email, dmartin@tfnn.com. Y'all have a great day, and I'll see you tomorrow.